Hey, what's up, everybody? Today, I'm going to share with you the #1 secret so that you can pay less in taxes. Now, the title of these videos sometimes feel a little bit gimmicky to me, and I'm sorry for that, but the reason why I do that is I'm researching what people are searching for in their videos or online so that I can reach more people and share these tips with them. And so that's the reason why it might feel that way sometimes. But this isn't really a secret, to be honest with you. It's just something most people don't think about. It's not our natural tendency to think this way, and I'll share with you a little bit about that. And because of that, these major brands who you see all the marketing ads for, what they do is they end up reinforcing what our tendency is, and therefore they don't actually help us change the way we're thinking, which would really help us out and save us a ton in taxes. And so we're going to go over that. Like I said, not really a secret, but a little bit of a secret just because most people aren't thinking about it. So I'm going to share that with you so that we can pay less in taxes, because ultimately that is the goal, is to pay the lowest amount legally responsible for you to pay in taxes. My name is Brad. I'm with Wooten CPA. The point of the YouTube channel here is to bring peace to your tax and financial responsibilities. I hope that my videos are doing that. Don't forget to subscribe to this channel and hit the bell so that you get notifications when I post new videos. Also, hit the like button down there if you enjoy the video, and share it with your friends so that they can continue to learn as well on how to pay less in taxes. So what are we talking about here? Again, like I said, it's not really a secret. What we have is we have the typical way that people think and the typical way that people do their taxes. So this is going to be our timeline right here. And right now it is February of 2020. So I'm going to say February of 2020 is right here. This is January of 2019. This is going to be December of 2019. Now, I'm not really thinking about December of December of 2022. I know that you're probably not either. But what happens, here's what we're going to cover. This is what typically happens. Right now, in February, everybody is about to do their tax return, and they are looking at 2019, and they're asking the question, how can I get a larger refund when I file my taxes? That's the question everyone is asking. Now, I do have another video that told you to ignore how to get a larger refund. So if you've watched that video, you're not asking the question, how can I get a larger refund? You're asking the question, how can I pay less in taxes? Because again, we talked about how the refund has nothing to do with how much you're actually paying in taxes. It's not the number you should pay attention to. The refund is basically just how much you overpaid in taxes. And so we really don't care about that number. We want to pay the least amount legally required in income taxes. So you're asking, how can I pay the least amount in taxes for 2019? And so what you have here is you have a time period that has already happened. You are looking back to a time period that has already happened, and you have facts that have happened that you are going to use to prepare your tax return. And people are looking for deductions. People are looking for ways to get their refund higher. They're looking for ways to decrease their tax, as they're all looking back to what has already happened. And so the problem with that is you can't change anything about what happened in 2019. Now, there are a few things where you have until April 15th to put money into an IRA. So if you put money into an IRA, you can deduct that against your taxable income as long as you qualify for those things, and you can save a little bit on taxes. So let's say you're in the 20% tax bracket and you come in February of 2020 and you say, I want to pay less in taxes. Here's what happened in 2019. I prepare your return. I've said this a million times as well. It's a basic math problem. And your refund isn't quite as high as what you were hoping for, or you end up owing in taxes, and you say, how can we How can we fix this? And you're asking me, how can we fix 2019? How can we fix the past? And I'm going to tell you, there's not much we can do. Now, I might say, okay, well, you didn't contribute to an IRA. If you want to put $5,000 into an IRA and you're in the 20% tax bracket, then we can reduce your taxes by $1,000, essentially. But you are going to put $5,000 into an IRA to save $1,000 in taxes. You're still going to be out $4,000 of cash. This is never a way to improve cash flow. It's a way to reduce taxes and to save that money and give yourself $5,000 instead of the government $1,000. But it's not a way to improve cash flow. So there's really nothing we can do. What you need to do is you need to be looking forward. Now, again, this is something that we don't typically do that often. Most people don't look forward, and they certainly don't look forward 2 or 3 years. And it's even more that way with taxes because most people, probably 95% of people, aren't thinking about their taxes until it's time to file. And when it's time to file, you're always looking back. So I want to get you looking forward because there's a lot more that we can do if we're looking forward on how to reduce our taxes. And so what I do is, this is 2020 from here, February to December 2020. What I love to do is I love to sit down with people in July and we can forecast what we think your 2020 taxes are going to be in February of 2021, because we have half a year under our belt. We know what your pay is. We can see things that are happening. We can forecast what we think is going to happen the rest of the year. And in July, we'll sit down and we'll just say, hey, do we think that our withholding is what it should be? Or are we expecting to get a refund? Are we expecting to owe? And again, I'm still talking about refund there. But we can also think, is there anything that we can do between now and the end of the year to actually lower our taxes? Then again, we might sit down in November or early December when you've pretty much got the entire year under your belt and you know what is happening during the year, and you've only got about 30 days left of what might happen. And so we can very accurately at this point pretty much do your tax return and know exactly what it's going to look like in February of 2021. However, we still have 30 to 45 days of time where we can make some moves in the tax year that is still happening and be able to lower your taxes, reduce your taxes, or do some planning before year end so that you're not looking back after year end and it's too late to make any changes to what happened in 2020 because it's already over. These are great. You're coming in July, November of the current tax year, looking forward to when you're going to file your taxes in 6 to, in 2 to 8 months. You're looking forward 2 to 8 months. So what's the next step? The next step is to look forward a couple of years. And one example of this is I just talked to a friend yesterday, actually, and he called me and said, hey, look, I'm not itemizing anymore. I was itemizing because of my mortgage interest, my charitable giving, my property taxes. I was itemizing until they went and they doubled the standard deduction. So for a married couple, the standard deduction is now $24,400 for 2019. And so the thing here is, hey, my itemized deductions add up to about $24,000, and therefore I'm not getting any benefit from my home mortgage interest or my charitable giving or my property taxes like I was before. It's great that the standard deduction is higher, but these other things that are still deductible if you get high enough are not benefiting me. So what can I do? And he was already thinking forward. He was thinking forward at least a year, maybe 2 already, and he had looked into this term called bunching. And so bunching is what you might want to do with your charitable gifts in order to be able to get that benefit every other year or every third year. So let's show you what's going to happen if you're looking forward in just this one example. Like I mentioned, standard deduction is $24,400. So if you're going to bunch your gifts, let's assume that his home mortgage interest is about $12,000 and your giving is about $12,000 as well. So those two things add up to $24,000. Those are the only two we're going to pay attention to right now. So if every year you have $12,000 of giving and $12,000 of mortgage interest, you will never get to itemize. You will continue to take the standard deduction every year because it'll never exceed that amount. Now, if you want to bunch your giving so that you give 3 years worth of giving in 1 year, you can do this through a donor advised or a DAF account where you can still give to your ministry, your church, or whatever the charity is that you want to give to. You can give to them on a consistent basis, but if you put all of the charitable giving in 1 year into a donor advised fund, you get the tax deduction in that year. And so what could happen is you could put, instead of $12,000 in giving here, you could put $36,000, which is 3 years of giving, into a donor advised fund, which is going to raise your itemized deductions to $48,000 instead of $24,000. So now you will itemize at $48,000 because that's going to be well above the standard deduction. And then this year you're going to take the standard deduction. This year you're going to take the standard deduction, and you're going to set aside your you're going to be giving out of your DAF account to the ministry, so you're still giving every year. But then you're also going to be setting aside what you're going to give again in year 2023, where once again you'll put $36,000 that you set aside over this time into a DAF account. You'll have your mortgage interest, which will go down every year, of course, but you're still going to be itemizing. So basically, instead of 24, 24, 24 in deductions, you get 48, 24, 24, 46, 24, 24, 44. And so very simple, what this is going to do is if you are in the 20% tax bracket, you just took an extra $24,000. You just took an extra $24,000 of deductions against your income in the 20% tax bracket in this year. That is going to save you. I'm sorry, I'm writing horrible today. This is going to save you $4,800 in taxes as opposed to taking the standard deduction. So basically, you'll save $4,800 here. You'll save $4,600 here. And so you can see very easily that over 2 or 3 years, you can be saving thousands of dollars in taxes. And again, the principle is just to look forward. This is one example. And I know some people are saying, I don't have $36,000 right now to put into a DAF. I'm not in this category. There's more people who are closer to this category than they think they are. And so this strategy actually will work for a lot of people. And there's other ways too. I talked to my friend the other day about, hey, if you don't have the money to dump it in right up front, there's other ways to be able to take advantage of this. As long as we're planning ahead, we're looking forward, and we're coming up with strategies. And so, again, just to recap, the biggest problem I see with people in their income taxes is they all want to pay less in taxes. Everyone wants to pay less in taxes. Everyone wants a larger refund. And so they're looking back and saying, now that it's time to prepare my taxes, how do I do those things? How do I pay less in taxes? How do I get more deductions? And the problem is you're looking in the wrong direction because that's already happened. But if we take care of that, that's just tax compliance. That's just compliance work where we're filling out the tax return correctly, filing it with the IRS. What I want you to do and what you need to do is you need to find a good CPA who will help you to start looking forward and be able to plan tax planning instead of tax compliance, where we can come up with some strategies that fit your particular situation, and we can look forward and actually reduce your taxes in some cases by thousands of dollars, where we're just changing when and how you do things. This example, this person was going to give that amount of money anyway. So we didn't give out any more money than we were going to. We just changed the timing of it, and we changed the vehicle that the money was going into and out of so that we could save on our income taxes. And so there's other things just like this, especially if you have a Schedule C business, if you're in business for yourself, or you own an S corporation or an LLC partnership. If you're running your own business in any kind of entity, there's plenty of ways we can look forward and minimize taxes legally. There's also, if you're a real estate agent, there's great ways to do that as well. If you have a rental property, we can do this also. And again, if you're just a W-2 earner, there are some ways that we can plan ahead and minimize taxes in those situations too. So I often tell people, if we're looking back, there's just not a lot we can do. The facts are what they are, and I'm sorry, this is what your situation is. Compare me to another CPA all you want, but unless they're doing something shady, they're going to be stuck with the same facts and circumstances that have already happened as well. Come in sooner. Let's start looking forward, and let's actually pay some less in taxes legally by simply looking forward and changing the way that we're thinking about saving on taxes and being more forward thinking. If you have any questions about that, feel free to reach out to me, leave a comment, jump over to my website and make an appointment, or just give me a phone call. I love to talk to people about this. I love to help people see how they can legally pay less in income taxes. And also, don't forget to subscribe to the channel, hit the bell so you're notified when the next video comes out. Like this video hit the like button if you like the video, and don't forget to share it with your friends. I really appreciate you taking the time to watch the video, and look forward to continuing to help bring peace to your finance and tax responsibilities.